Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, we're going to show you why what the Fed is doing and this economy is a total disaster in the making. Let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
All right, Bob. So we're going to get into more macro stuff here and things that aren't normally talked about on the interwebs. And one of those is productivity. So explain to us how that productivity is really throwing a major curveball and everything here.
Yeah, so it's a really interesting thing happening, Phil. So we talked about credit creation is now finally contracting, but it was on an absolute tear, over the last 2.5, 3 years. And it basically outstripped everything. When you look at inflation and you look at economic growth and what I would call real growth versus these sugar highs that they give you, is that productivity growth needs to be steady and growing in order for you to absorb the additional debt that the population is taking on through government spending. And what we have here in the first chart, if you look at the last 20 years, is we've had a significant fall off in productivity, which is really weird because all you ever hear about is automation. No, right. but it's not translating into a more productive economic environment. Meaning that the value add to the economy is lessening over time. And a lot of that has to do with a heavy shift into service economy that is not what I would call irreducible redundancy. You get to a point where you just can't get rid of these people, or your business stumbles. And so productivity is kind of stalled. And now with, them requiring more and more income to work, it's going to make the productivity even worse. But I want to tie all this together. This is really what's happening is we're getting to what's called pushing on a string. So you have productivity kind of anemic and falling. And then you have M2, which is, basically the supply volatility of money, is also collapsing. And so you have credit creation that went hog wild. You have productivity falling and you have M2 falling. That's a recipe for disaster. It's shown that the Fed is now impotent to stop what's going to happen. Okay. So, and especially with the way Powell is pressing forward, he's pressing harder to create these situations. He's going to try to increase productivity by getting people laid off, but the M2 is going to continue to collapse. You're going to have market velocity continue to collapse. And you have the government, which is the least productive member of society, with the only one increasing their cash flows, if you will. And so it's pushing on a string. It's when you get to a depression and basically the Fed's ability to influence events ceases to exist.
This is where I think you kind of go into bunker investing mode. Raise cash, raise as much cash as you can. If you're thinking about selling that RV, sell it, raise the cash, park it in treasuries, park it in a money market account, and ride out the storm.
Yeah, I mean, look, far be it from us for being macro bearish, but but this is the data. I mean, if this was the other way around, we'd be screaming at you to get long the markets.
Yeah. And that's coming too.
What's that?
And that's coming too eventually.
Eventually, yeah. This has to be cleansed out, and they've been pushing this out for so long. We're finally at a point now where, and try it at home. Get a piece of thread, put it on a table, and try to slowly push it across the table. Okay? You'll find that at some point you can't do it. So that's the situation that we're in. I thought people should see that anemic productivity, coupled with increased government spending and tighter credit is just a recipe for low growth environment. Low growth environment means cash flows are going to dry up. Oil shock meaning cash flows are going to dry up. And also we didn't talk about the ISM report was pretty bearish too, Phil, this week.
Right.
And that's the last place people have jobs. We're joking this week, hey, if you can't get a job, become a programmer, start coding. And then Chat GPT shows up. Well, forget your coding job. And then we were joking, saying, well, I guess everybody's going to work at McDonald's that can't code. And then what's McDonald's doing?
They're laying off.
They're laying off people. So
yeah. Yeah, it's bizarre.
Yeah, I would cry if I wasn't. I would laughing here. So
yeah,
it's just so bizarre, and we really don't know where this is going to all go. I mean, everybody's flying from the seat of the pants here, Phil.
Yeah, I agree. There's a lot to this that's uncharted territory from from COVID, from all the stimulus. I mean, we've never seen the money printing ever that we've seen. What I think it was something like the last year and a half from COVID till middle of last year or something was the most money printed in the history of the Fed prior to that. I mean, that skews a lot of things. And I think that's what's hard now because people are trying to look at history for reference. There is no reference for this exact moment in time with what they've done in the last couple of years, and they've screwed it up. And so now you got to pay the piper. And I think Powell's just finally to the point where it's like, all right, we can't really kick this down the road anymore because if we do, we're going to turn into Venezuela, and we can't have that. So this is the way it's got to be. We got to have a forest fire, like it or not. But like we said in the other video, it's not all bad. That's why it's a bunker investing environment we're going into. Hunker down, raise cash, park it, make 4 or 5%, whatever the terminal rate gets to, and ride it out.
Yeah, and look, and when's the last time you had a bunch of nations trying to usurp the U.S. dollar?
That too.
That's just something we should talk about later in the week because we think they're going to ultimately fail, and data doesn't prove that. Everybody gets so emotional about the dollar because they view the dollar as a proxy for the administration and the deep state.
Right.
Okay. And everybody wants them to get their comeuppances. But China's not it, and the BRICS aren't it either. But they can cause a lot of angst and consternation while they try to, basically they broke into their big brother's closet and they're trying to close on right now. And then they're going to find out pretty soon that it doesn't fit. And big brother is coming down the pike here with more austerity. He's just going to actually just blow everybody away. We should talk more about that, Phil, too, because I think a lot of people have this notion that when things go bad, the dollar's going to fall. And no other nation can really, at this point in time, take up the slack. Russia's as big as Texas, maybe?
Right.
And China is way overvalued. So I think it bears a deeper discussion. And that's also bearish, too, by the way. So there's nobody else in the wings. It's really going to be a little bit chaotic here for a while until things sort themselves out again.
Yeah, so we'll cover that on the next one. So guys, thanks a lot for watching. Let us know your thoughts on this. Productivity is not something that's talked about a lot, but it's a key component into the bigger picture of how things work. Just another piece of the puzzle there to let you know that probably a good idea to be defensive going forward. So thanks for watching. Please hit like and subscribe. Thanks a lot, Bob. We'll see you guys on the next video. Take care.
Trade Genius.